Hello, Culture Matters podcast. Buckle up before I introduce you to our guest today. Here is, or really, our co-host of the Value Investor Series podcast. Here's a quote just for this episode. Soros has taught me that when you have tremendous conviction on a trade, you have to go for the jugular. It takes courage to be a pig. It takes courage to ride a profit with huge leverage. Stanley Druckenmiller.
I literally knew, I knew it was going to be like, I didn't hear the quote, but I was like, oh, this is going to be a Stanley Druckenmiller quote. Yeah, so I'm not Stanley Druckenmiller, and I'm not Kurt Nielsen, and I'm nothing like those three people. Yeah, let's just leave that there. I would say something, but we're on a podcast.
I'm so
Um,
happy to start with this today.
the, can I
So
just
the
say
audience can,
the one that I kind of know is a very nice person. I wasn't going to say anything against him. I'm just very much not like them. Well, what it seems to, I don't know. I reckon from my experience with one of them that they would all be kind of similar.
if you are not familiar with the Culture Matters podcast today, the one and only Aleck Arena, founder of Arena Securities, is on. No, this is not financial advice necessarily, but a conversation around finance and investing and all things value. Investing past performance does not dictate future results. But here, Aleck is back. We're going to talk about a little update on Arena Securities, life as a value investor, and I just felt a little cheeky this morning. Maybe
Yeah.
that's like a British thing. I don't know if that works for Australians, but a little cheeky this
No,
morning,
that's normal.
picking my Stanley Druckenmiller satire.
Yeah. I can get right away with what's been going on. So
Yeah,
pretty
please.
much down in Australia, we did our companies came out with their full year results. Most of them, some of them came out with their half year results. It depends on what reporting period. But for all the companies I'm about to mention, it was their full year results. So yeah, we had a decent quarter performance wise at Arena Securities. And the first company I'm going to speak about is SKS. So it's an electrical business, and effectively they hook up data centers and they do electrical work for building companies. Yeah, they do work in commercial, a tiny bit in residential, but mainly commercial and industrial. Um, there's been these data centers popping up in Australia all over the place, probably in the last 5 years, but it's really taken off in the last 2 to 3 years. And SKS has got a really big fleet of people which are trained and they've done data center work before. So they're picking up most of the data center work around the Melbourne city. And yeah, their revenues shot up enormously. So, like 2 years ago, their revenue was around $30 million. Then they had a massive year last year, and their revenue went up to $130 million.
Whoa.
And then the full year results this year, their revenue's gone up to $260 million. Um, uh, their guidance for this financial year, which we are now in, so in Australia, the financial year ends at June 30. So their guidance for this financial year is $300 million revenue. So they've 10x revenue effectively. Their margins have also improved because it's not a conspiracy theory I'm throwing out here, but I wouldn't say it's I've got firm proof of it, but I have an idea. Effectively, because they have fleets and they have a balance sheet which has got $30 million of cash that they don't own any tax on, and they've got a debt facility of 35 million, which is undrawn. Well, very effectively, they churn the debt facility a bit, so they do use it a bit, but they use it very, very, very short term. So that's not like in a reporting period you would see him holding $20 million of debt. It just doesn't happen. So effectively, they can do $100 million projects for a data center, and their competitors don't really have the scale to do it. So when they do these bigger projects, they actually charge more. So usually a bigger project, because it's a bigger dollar amount, your margins are less. But in this circumstance, for the small stuff, their margins are smaller, and for the larger stuff, their margins are bigger. So yeah, they're really well placed going into the future as well. And I think there's a number of data center projects around the Melbourne CBD, but SKS is Australia wide now, and they're establishing a tiny bit of a foothold in Darwin, which is no one really lives in Darwin. I didn't really know how to say that. It's Darwin's located right to the north of Australia. It's actually called the NT, is the state. Well, it's not a state; it's a territory. So, um, but it's on a map. It appears to be like a state, but yeah, in Darwin they've got crocodiles and all that Australian stuff. It's like what you would expect Crocodile Dundee to be like, or I think if the people from Darwin came over to America, it would be a bit like coming to America. It would be a bit like that's not me, even though Jay likes to make jokes about it. But yeah, Darwin's really close to Indonesia, so there's going to be a lot of data center work in Darwin over the coming years, and they're going to be hooking stuff up, and it's going to be integrated in the Australian ecosystem and probably in the Indonesian ecosystem. And then they've been doing a tiny bit more work around Western Australia, trying to compete with the bigger guys that do a lot of mining work. But I would say that's probably not their forte at the moment. Their forte is mainly data centers. They've got a bit of an operation up in Queensland, and they've got a bit of an operation in New South Wales. But yeah, the strongest foothold of the market they have is Melbourne. They've done a bit of work in South Australia as well, and they've got a few people down there. But yeah, I would say they dominate that Melbourne market. And I should probably just move on to the next share. I can speak a bit about valuations. So
Well,
SKS is
I just
relatively
want to, can I ask something about like
certainly,
the
mate.
10 times revenue growth? Is that something you even
No,
were
that doesn't happen,
surprised
mate.
by?
That doesn't happen every day.
So,
Well,
yeah,
two
how
years
do you stay
ago, they
humble?
because you have your losers. You get humbled in markets all the time, mate. Just wait for the next quarterly report to come out. I'll speak about a few losers. I think I still probably will have decent performance, but yeah, you have your losers, you have your winners. Um, it's business. It's you want to. So I think SKS, we've got the luxury of having a real quality management team there. The Jinx boys are very much involved at a board level, obviously managing the business, and then their CFO isn't a part of the family, but I've spoken to him a few times myself, and he's like, I reckon he's a great CFO. He's like one of the, yeah, he's a pretty straight shooter, and I'm not trying to take shots at anyone else, but he's not one of those like slimy corporate guys, if you get what I mean. Like he's just kind of he's doesn't have like a long history with listed businesses. He's like he does the job and he does the job well from what it seems to me. But he just like he gives you the information. He's a down to earth Australian guy, and you ask him a question, he answers the question. He doesn't like walk you around the like when you ask a politician a question, they can't answer it. They go around in circles and spin some bullshit. Yeah, he's not a person to do that. Yeah. So I don't know. It's much easier, Jay, when you have a really quality management team. But I'm still trying to outperform the markets in general. So I'm investing in really small businesses, and they don't always have a really amazing quality management team. Sometimes that's why the share price is cheaper. That's why it trades on a cheaper multiple. But yeah, just on valuation of SKS. So when I first bought it, it was insanely cheap, and the share price is 10x plus some. Um, and that doesn't happen like at all. I think you'll be lucky to get a 10 bagger once in every 10 years. Um, so it was trading on about 10 times earnings when I first bought it, or 10 times my predicted earnings, because 2 years ago they've done a bit of capex. They were flagging this data center theme. Their profitability had gone down. They reckon they were geared up and ready for all this data center work, and they telling the truth. It's all come through, and their profitability shot up from like 1.2 million to I would expect their profitability to be close to 20 million Australian dollars after tax this financial year. So yeah, it's an amazing growth story. But the multiples also expanded onto that. So now the company's worth 300 plus million dollars. And it's it's big enough to be in the end of the ASX 300 index. And there is now people passively buying the stock. So the stock's multiples expanded from 10 to 15 times earnings to around 20 times earnings. It would actually be 30 times earnings, but that's backwards looking earnings. So forward earnings, it would probably be back to around 15. But yeah, I don't know. I think about we'll see what the market's going to do in the future. I'm scared to make a flat out statement about valuation because there's forward earnings, there's current earnings, and then there's this little daily move in the share price, and the share price has gone down a bit over the last 2 to 3 weeks. So I'm scared to make a statement about like what PE ratio it's trading on, but I still think there's value there, even though it's run so much. I sold a bit around $1.20, and now I just look stupid. So, but yeah, I still holding the parcel I currently have today, and I'm not giving any financial advice. But yeah, I don't mind the company at all at this current price. It's not the biggest screaming market. It's not the biggest. Um,
What are some things that you
it's not.
look
It's
at?
not the biggest bargain in the share market, but yeah, it's all right.
What are you some things or ways? Yeah, what are some things, variables you look at, or ways that you
Yeah, I actually.
start
So I've worked.
thinking about keeping or selling off of a position that that's given fruit? That how do
Yeah,
you
well, I think Tom and David Gardner from the Motley Fool always say, I don't know them personally, but as a kid learning how to invest, they always say it's best to um, pull out your weeds and water your plants. I think I butchered the quote there, but
that's
I think the message has come across. So yeah, I if if you've got a share that's really cheap and is a bit of a loser, you're probably not best off adding more to it if the thesis is broken or the thesis is failing or you don't trust the management team. And with SKS, the thesis is still currently playing out. It's a little expensive, but then if I sell, I have to pay tax. And then what else? Where else do I go? I have to find a share that's I can trust the management just as much as the SKS guys, and I would have to their growth prospects would have to be even better, Jay, because they have to pay the tax. So then you have to get a higher amount of like your investment criteria needs to be better. Um, if I thought SKS wasn't going to be a good investment going forward, I would have sold it, but I think it's going to be just a. I think it's going to be an. I don't know what the future holds, but I think it's going to be an okay investment going
there's
forward.
a interesting psychological piece I'd like to under talk through with you. It's like the more successful, if you could speak to this, it seems like the more successful company becomes over time, the more the return, the potential return, if you cash in your chips, it's got like it seems like that would be a heavier and heavier weight to carry. Like how do you stay convicted or stay balanced to the conviction of the facts, the figures, the thesis? Um, let's say that it went up another 1000x. How do you know, how would you walk down the street without thinking about
If I don't really care if it's like no one for it. Like it's not like it's not like I'm an NFL, NBA, or AFL player. I know what no one knows what an AFL player is in America, but like I'm not an athlete. No one's gonna spray me with champagne when I walk down the street, or no one's gonna be, there's not gonna be confetti when I walk down the street if I get an investment call right. So yeah, just thinking what's the best decision by my shareholders. um, currently, but also in the future. And the share price of SKS has fallen by about $1, so it's gone from 440 to 330 in the last month. And I had the opportunity to sell at 440, but I thought like it could be a stock that trades. It could be a stock that's fundamentally valued at a much higher price in the future. I have done work around what I think it could be worth in the future. But if I was to say that on this podcast, I would think that some people would think I'm maybe naive and over bullish. Um, so I don't really want to give away the
Sure.
insights that I have, and yeah, like I would seem a bit stupid as well. I'm not Kathy Woods. I don't think I've heard her come out on CNBC before and say like all types of stuff and say that Tesla's worth $1,000 a share or all that stuff. And sometimes she's right and sometimes she's wrong. But I think I think Arena Securities shareholders can get an adequate return from SKS shares in the future.
Hmm. Is there another one that you wanted to talk about today?
Yeah, I think I've got 4 or 5 positions I've spoken about in my quarterly results. So um, I spoke I've spoken a bit about LaserBond before. It's a small industrial business. Them headquarters is in New South Wales. um, they've bought a 40% shareholding in a similar business in Western Australia, which is based in High Wycombe. Um, they've got a they've got a facility in Queensland, and they've got one in South Australia and as well in Victoria. Um, they had some labor shortages and problems. So effectively, labor is expensive in Australia. So they get migrants from overseas on a working visa, and they, because they're learning the ropes, they're not fully qualified yet. They don't have to pay them as much. And effectively, the migrants got to a stage where they were fully qualified and trained up, and then they moved to a different company that was paying them a higher price. So LaserBond's margins took a hit probably about 12 months ago now, and their revenue exceeded $50 million. So in Australia, if your revenue exceeds $50 million, you have to pay a slightly high tax rate. So this combined with a few other things, um, they had a bit of a weaker period, and their revenue was growing quite strongly though. So it's a really weird thing because on the if you looked at it from a revenue basis, the business has done decently well, but that hasn't fallen down to the bottom line. So profitability slightly decreased, held, and as an investor, we thought that the profitability would go up. And the last report they did, so for their full year results, it showed that they had a really good second half, like they flagged, but no one believed them. I'm talking about the management team there. And if you were to extrapolate that, which is a very dangerous thing to do, if you were to extrapolate that half, you would get a share price based on a fundamental basis, which should be worth quite a bit higher. So I held shares into it. I've lost a tiny bit of money on it. I think it's a really good fundamental business. I think it's got room to grow. They wanted to expand to the US, but they've held back on that, just waiting for their balance sheet. And I think their balance sheet to be rock solid, their share price to be at a higher price. Because if LaserBond's going to issue shares when they go and buy a business in the US, um, they want their share price to be at a very adequate price. And currently, I think their share price is undervalued and they're slightly under earning. So they want to have a fair stream of earnings before and a fair share price before they go buy a business in the US and expand. Because when they buy that business, the they're going to issue the seller their own stock. And I don't know, I don't have information on this. It's just what I think they're going to do. So yeah, I think they would issue their own stock, pay for a bit of it with cash, and I think they would draw on their debt facility a bit to also pay for a facility in the US. And yeah, I think it'll be a very interesting time. Obviously, if they buy a facility in the US, I think their profitability should go up. I've seen many Australian businesses go to the US and fail, but I don't know. We'll see what's going to happen, and yeah, I think they can succeed in the US, but we'll see. I mean, you never really know about expansion plans, but currently, I think the business is undervalued for what it is. Um, and yeah, I think it's going to be an exciting 12-month period for LaserBond, and yeah, it's trading. I reckon it's trading on about 10, 11 times earnings at the moment, based off next year's earnings. What my projected earnings would be for the company next year. Do you have any questions, Jay? I'm just going to keep rambling, mate.
What's your biggest lesson from this?
From LaserBond, I didn't really learn much from LaserBond, Jay, because as a value investor, it's like you buy the business because you think it's a good business at a cheap price, and they had a little hiccup, and the business got cheaper. So I bought a bit more. I did want to. I waited for that for them to provide us an update, and then after the update, I was reassured that my thesis was still going okay. So I bought a bit more. Um, so yeah, I don't know. I think it just showcases that investing takes time, and initially you're not going to make money on every position that you buy. Like I don't buy a position today and expect to make 40%. Um, for a share, for a share to be undervalued, the market has to. So the, it's hard to explain, but if I think a share is undervalued, the share market isn't the share market's not valuing it correctly. So the share market has to be missing it has to be missing something that it it's not in the share price. Like either the share market isn't completely clued on, or it doesn't understand why the share price should be higher. Um, and for your thesis to play out, for the share market to realize your point of view, usually can take anywhere from a couple of months to 2 years. If it's been longer than 2 years, Warren Buffett reckons you're most likely incorrect and you've missed something. But sometimes it can take even longer than that. So yeah, I'm just waiting for people to realize the quality of business that LaserBond is, and every few years it uh, has problems with staffing and all that. But I think their products are I think they're the market leader in their field, for the industrial equipment they supply to mining companies and industrial businesses in Australia. They effectively increase the wear life on digger buckets, with a solute like a they apply a solution to the digger buckets and to certain parts, and yeah, it increases the wear life. So I think it's a really good product, and mining companies buy it because it helps them. It helps them with profitability because they're not having to constantly replace buckets and parts on equipment. Yeah, that's pretty much all. I've spoken a lot about LaserBond, but that's all about LaserBond. I can move on to the next position if you want me to.
Yeah, yeah.
Okay, so the next position I spoke about quite a lot was Visan. So Visan is just trying to work out how to explain Visan. So it's a look. Skeptics would say it's a mining services business, and at the core and how the business started, it was a mining services business. What it's now, like what it is now, you would say so. There's like a consulting division, and they do consulting for mining, and um, there is quite a few divisions. So there's the consulting, there's the mining services. So effectively, what that is, Jay, there's um, they pump, they scan the mine like an open cut mine site, and they'll go, oh, there's an aquifer they're going to hit. There's 20 meters below the mine site. So they will then drill and they will suck the water out of the aquifer, and then they will pump the water into the ground again in a different position, so you don't lose the water resource which was under the ground. So they make an aquifer that wasn't there, and that's really important where they do mining in north of like in Western Australia. It's really important, and in a lot of mining areas, it's important because there's not much water out there. Um, so you just don't want to pump the water out and leave it and let it dry out because it's like a massive desert out of the north of Western Australia, even east. And yeah, water is a very precious mineral, and we understand we're probably going to run out of it one day. So they do that. They also bought a consulting business last year, CMP Consulting, that's based and run out of Melbourne. Two co-founders involved there still, and yeah, they're trying to expand all across Australia, and the business was growing quite quick. Since Viasant's acquired them, they've had probably a slower year. Um, uh, they've had to integrate it into the business, so their attention span probably slipped from being fully focused on running the business to we're integrating into a listed business, and they were trying to expand into different geographies as well. So they expanded into New Zealand recently, and now they've gone to other markets in the east coast of Australia, and they've now got an office in Perth. So they've had a kind of a growth year where they've been just getting a foothold in different geographies, I would say. And then WWS is a business that Viasat bought this time last year, and that's overperformed from what we expected. They integrated that very fast, and I think it kind of just slotted into the Viasat network. And yeah, that's it. They did quite well out of that investment.
What's what's behind or go ahead.
Oh, I was just going to say, like, so from memory, in 10 months, they made $3.8 million out of that. So WWS is Wastewater Services, and it's a West Australian business. And Viasat's based out of West Australia, so that's probably why they integrated it faster. What did you want to say? Sorry, Jay.
What was behind the scale of the consulting piece?
The consulting, so CMP, they just they were literally trying to effectively find staff in different geographies, and they were like setting up offices in different places because they were effectively just in Melbourne. Melbourne's a really decent market, but the biggest market for consulting about water is Sydney. So Sydney's market, I think, is worth an insane amount. It was several $billion. I can't remember off the top of my head, and it was effectively the Sydney's water market was worth like the work that's going to come out of there is worth half of what Australia's is worth. They have, I think Melbourne's got the biggest population in Australia, but like Sydney, a lot of the American people look at it as the biggest city in Australia, and it just about is. But I don't know, our population's fairly spread out. So there is other states in Australia, and for their water market to be that big, they obviously wanted to get a foothold in New South Wales and start winning some work there. And that obviously means setting up an office. And they've done that in most places around Australia in the last 12 months, as well as
Oh,
integrating into the listed business.
any insights in how they integrated so quickly with the acquisition of WWS?
I just I think it's a similar industrial business to what they're used of. So the chairman used to be involved in mining services businesses in a listed mining services business, and if it's an industrial business, it's similar to the it's just escaped me what the actual drills are called. There's not a name for it, but it's a similar type of business. So I think they just the management of that business was still involved, and the acquisition was just done in a faster fashion. And they didn't. There was you don't really have to set stuff up for WWS. So for CMP, they were still setting stuff up, Jay. Where WWS, they were just like they just got a bit more work for them to do, and they just made slightly more money than they did last year. Um, so hopefully that makes sense. But like there was less spread out stuff to do. If that, yeah, hopefully that makes sense.
Hmm.
Yes, no, maybe you did explain that horribly, because with the consulting business, like Australia is vast and very spread out, and if you're based out of Melbourne, Brisbane, and Sydney, and the North Island in New Zealand, they're all very so. New Zealand, that's a different country. That's effectively like someone in It's like someone in North Carolina saying, "I'm gonna go set up um, a business." I don't know that I'm gonna so like a consultant in North Carolina saying, "I'm gonna go set up a business in Canada," and then
Yeah,
they have
that's a
to actually
culture shock. That's tough.
they they have to, and while they're doing that, they're trying to set up a business in
You would
New
want to
York.
have like, if correct me, I would think if you're going to use that analogy, we'd want to have personnel and maybe background story and some infrastructure in Canada to get the most value out of that cross
Yeah,
cultural expansion versus a North Carolina and trying to go. It wouldn't make a lot of, why not just do it in South Carolina or a state right next to it? You're saying it's such a
because
large distance of culture.
they already had the states next to him done, and they were setting it up. But the co-founders know a lot of people in their industry, and they know them quite well. And in with the expansion plans, the co-founders of that CMP business, they are moving to different states. One's staying in Victoria, but one's moving to a different state to help with the expansion. So,
Hmm.
and I know they flew over and spent some time in New Zealand recently um, with that expansion. We're there for the start, the setup stuff in New Zealand. So, yeah, that's as much as I can kind of comment
Okay.
on that.
But you feel
And
strongly
then
about it?
is I actually feel most strongly about the asset management division. So they're trying to set up a asset management arm to the business. So obviously they're try to raise some capital at some point. They're doing a joint venture with, I don't want to butcher the name, but the Carrara Aboriginal Corporation. It aims to like establish an underground supply of water to deliver 10 gigaliters of water each year to large industrial users in the Pilbara. The Pilbara's again, it's really far north of Western Australia. It's a 2.5 hour flight north of Perth. It's probably closer to Indonesia and Singapore than it is to the Perth CBD, but there's not a lot of water up there. So they still have to get the 5C license and the approval for it. But yeah, all the applications and all that stuff's in place for them to try to get approval for this project they're doing. And they're obviously sharing the rights with the native custodians of the land, the Aboriginal people. Um, so yeah, it's a joint venture with them, and they've obviously needed to involve them to try to get government approvals. Um, and there's not a lot of drinking water up there, Jay. So 10 10 billion liters of water every year going up to the just in that Pilbara area. It's it's a decent asset because that can be used for multiple things. It can be used for drinking. It can be used for dust suppression in the mines. It can be used. There's so many. so many things that can be used for. Um, and the price on that water is insanely expensive because there's not a lot of water up there, Jay. So yeah, people are going to have to pay a decent price. I've got some figures in mind, but I think by the time they actually set the asset management division up and they start pulling water out from the body of water they have, I think the price of water would be different. So I don't really want to comment on the price today, but I think uh, I reckon it would be above.
Huh.
I reckon it would be above $8 Australian. Yeah, we'll just leave it there. Yeah, water's like it's a commodity, and it's probably a commodity of the future as well. So the price just it's like commodities move up and down. So the price of water is probably going to do the same thing. So in 5 years' time or two years' time, I would expect the price to be slightly higher. Um, but it could be lower depending on the economic environment. But the I they're doing it in an area where the whole economy is based off them. It's really weird because the workers that come into that economy, they usually live in Perth or other parts of Australia, and they fly into that area, they mine there, and then they fly back home. So, and those mines are they have the biggest iron ore bodies in the world. They have the best iron ore assets. Um, their cost production is so low, even though labor prices in Australia are so high, and the amount of ore they're able to move is just insane. That I don't think if we have a I don't know, but if we have a really bad recession, they're still going to. I still think the iron ore price is going to be higher than the cost of production, so they're going to keep mining. I don't think the mines will shut down the Pilbara, meaning the water should still be worth a decent amount of money. I hope I didn't lose the listener there, but yeah, I don't think the those mines up north in Newman, in Port Hedland, in Tom Price, I don't think they're going away anytime soon. They still have mine lives of 30 to 40 years, and they are extremely profitable mines.
A- any other specific security
I've
updates?
get, yeah, yeah. Well, I think I've got a few more as well, Jay.
We we
I don't
we
know
we
how Warren
might
Buffett does this, mate.
we what'd you say?
I don't know how he does this. How people ask him about stuff, and he just keeps talking. The amount of
Unbelievable.
water I've been drinking, I'm getting a dry throat.
Yeah, I think I
Um,
think I think we should we should do a part two. Honestly, there's so much here, and I've got a lot more questions. I guess just to if we were to p- think of these few securities as let's say, I guess um, a theme. Is there a
yep.
theme that comes to mind? Just thinking it through in the days and weeks and months and maybe even quarters and years that you invested time, energy, intellectual property, analyzing them, researching them originally, the work that's been done throughout, the different lessons or nuances of each company. And I don't know, is there a theme that you could
Well,
elucidate?
the shares that I've mentioned, the management teams all have extreme insider ownership. They've made a lot of money out of it because the share prices have gone up because the business has been more profitable. But I think the theme that stands out with them is Viasat at the start didn't have a rock solid balance sheet because they did this acquisition when they bought the drill rigs. And the drill rigs, I can't remember exactly how much it was, but I think they paid $30 million for them. And I think they could have sold them for like $37 million straight away. But they that was the only time in Viasat's history since being listed where the balance sheet was stretched or close to being stretched. Like it was, if a few things went wrong, they would have had to sell the asset. or do a capital raise. Um, and since then, they've all had rock solid balance sheets. So I think that's really important because you're a rock solid balance sheet. You know you're going to be in business in the future, and you know you can outlast cycles. And then you can pick off competitors and expand. So yeah, I think that's these three companies mentioned. That's what stands out to me um, about them. The management teams are all very aligned. They're switched on, and they've got rock solid balance sheets.
Wow, I love that ending. Wow. I do have is there any quote that comes to mind in closing? Any quote or adage that you'd say?
I don't know. I feel like I've probably accidentally quoted Rob Milner there because I think like he's spoken about it before at Soul Pats, like the company that he runs. They've got a rock solid balance sheet, and it helps because your employees know that they're going to be in business tomorrow. They're going to get paid. Um, you know that you can outlast multiple cycles. It just it's all about yeah. It really helps with consistency. It helps with and you know what like if you're really in a position with a lot of debt and you're a bit scared about tomorrow, your performance I don't think is going to be the best because you're going to be sitting at night, you're going to be struggling to sleep, and your performance is going to be a lot better where you can just get a good night's sleep and rock into work the next day and know that it's all going to be okay.
I love how you grab the mic. You got to drop the mic. For everyone that's listening to
No,
this, watching on YouTube, go listen to episode 1038 of the Culture Matters podcast. Aleck Arena and I believe fifth gen chairman Rob Milner of Soul Pats.
yeah,
Unbelievable in exchange and relationship and interaction. So much wisdom there. And please leave us a review in the Culture Matters podcast. Share this with a friend that needs, and you know they need and want and desire to level up in business and investing in business. And we'll see you next time on the Culture Matters podcast. Aleck, you're the man.
thanks, mate.